Look, I know firsthand that a lot of people just love to mock us gold bugs, but we sit here and tell you how good it is, why you need it, and why you should have gold in your portfolio. But I'm here today to double down on what I've been sharing with you over the past year or so, and that's the moment where we've arrived right now. Yes, we have. I just read an article on Financial Times, and I'm going to quote a few clips on it, and it will change the way you think about gold and what it's doing to the world. Gold's been breaking out recently amid higher than expected inflation in the United States and general anxiety over everything from geopolitics. You guys see the bombings and the wars, oh my God, all the way to the November presidential elections, which are going to be scary, to where monetary policy and markets go from here. All these things are predictable reasons for gold to continue its massive run and continue to surge. But there are deeper and longer term messages in the rise that investors should pay very close attention to. So let's get started by talking about inflation. Whatever happens over the next few quarters, I've really thought long and hard about being in a period of higher and longer inflation. Aside from the possibility of a technology-driven productivity miracle, it's hard to think of a macro trend at the moment that just isn't inflationary. The economy is running very hot, and that's from fiscal stimulus in the United States to more supply chain redundancy as countries de-risk all the capital investment required for the clean energy transition and reindustrialization in rich countries. Now, even the aging U.S. baby boomers are likely to see an inflationary force. Since they have health, time, and plenty of money to spend, gold is historically an inflation hedge, but it's also something that investors turn to when they're worried about the stability of the status quo. It will languish for decades and then all of a sudden break out like it has now when the world is at a major pivot point. And I think we're right there right now. It's right in front of us. It's no secret that Washington's consensus, which expected emerging nations to fall in line with free market rules written by the West and the post-war Pax Americana, are long gone. Now, trade tensions between the West and China are also growing. We've covered that many times on this channel. Meanwhile, the weaponization of the dollar following the outbreak of the war in Ukraine has quickened many moves in countries, and most importantly, all the way to China, to sell treasury bills and buy gold as a hedge against America's financial might. It's happening. China's buying gold in record numbers. Now, it's easy to imagine this weekend's escalation in the Middle East tension boosting gold even further. That pendulum shift has many analysts predicting another massive run-up in gold. Philip Giselles, the chief strategist for BNP Paribas Fortis, and his colleague chief economist Cohen De Lewis, I hope I got his name right, the authors of The New World Economy in 5 Trends, are predicting gold will rise from its current price around $2,370 an ounce all the way to $4,000 in the not-so-distant future. Look, I've been telling you gold will hit $3,000 since we traded under $1,900 an ounce, and my wife loves telling me that I always love being right. So yeah, seriously, I was all over that call. Go back and watch the video. Subscribe if you haven't already. And we're up a pretty big amount in a very short amount of time. Hopefully you followed our advice and you got some exposure to gold somewhere, either in your portfolio, at home, or in your retirement. Now, as Giselles put it, to quote him, this isn't just an interest rate thing. People are hedging against a new world. Let that sink in. As a recent report by Currency Research Associates noted, quote, China buying gold and selling treasuries mirrors how Europe's central banks began to redeem dollars for gold in the late 1960s as the Bretton Woods system began to break apart. Quote, indeed, that was the beginning of the last long sustained run that we had. And that's when gold really had a massive rise. Between 68 and 82, it rose against both the Dow and the dollar. Now, there's other ways in which that period chimes in with today and syncs with what we're doing. In 1971, when Richard Nixon, who was then president, took the U.S. off the gold standard, he also imposed a 10% tariff on imports. This was a kind of unofficial devaluation of the dollar to protect U.S.-made goods from exchange rate fluctuations. Now, Donald Trump has, of course, proposed a 10% across-the-board import tariff if he's elected to a second presidential term. Trump also decried the way in which a strong dollar penalizes American manufacturers abroad. However, the recent trip to Beijing by Treasury Secretary Janet Yellen to protest against Chinese dumping underscores the fact that Biden administration is equally worried about the U.S. industries and its workers. Now, when you think about this, I wouldn't really be surprised to see some depreciation in the dollar, no matter who wins the White House, right? Whether it's Biden or Trump or whoever else goes. That too would be good for gold, which tends to go up when the dollar weakens. And we're seeing that every single day. The final reason to be bullish on gold is the picture of U.S. debt and deficit, which is quickly becoming unsustainable. Let's be honest with ourselves. The most recent Congressional Budget Office projections put U.S. debt at 99% GDP by the end of this year, ladies and gentlemen. It had it on track to reach 172% by the year 2054, long ways away. But if this happens, the result would be monetization, inflation, financial repression, and a period of extreme chaos in monetary policy and markets. Now, bad for the world, but good for gold. Is there really any hope for a different outcome? I don't think so. I really don't. We're on a run and it's not stopping. One could imagine inflation eating away some of the debt, but higher for longer rates would create an even more fiscally unsustainable position, given that the asset prices and thus tax receipts would also be likely to start falling apart. Gold bull Luke Gromen, who pens an investment newsletter called The Forest for the Trees, has argued that since the only thing that can be trimmed from the U.S. budget is interest payments, which cuts to welfare entitlements and defense spending are not politically viable, let's be honest with ourselves, the Federal Reserve will eventually be forced to shift direction and lower interest rates so that the U.S. can avoid a complete death spiral, something we're tailing into and it's not far away. Yet more easy money would undoubtedly be good for gold. So where are you at with this? Please comment below. You've seen the run that gold's been on. You see where it's going. There's a lot of reasons it's going to go a lot higher. Please position yourselves accordingly.